Every so often, I'll meet someone who insists that they've yielded better returns on their investments in the stock market than if they had purchased their own home some years earlier. While it's definitely possible to beat the real estate market, there are times when owning real estate beats other forms of investments, even when the annual returns are lower than other markets. So today, I'm going to talk about when it makes more sense to own real estate and when investing in stocks, bonds, and other funds may be the better option. Hello everyone, Jonathan Lee here, real estate sales representative based out of Toronto, here to help out buyers and sellers maximize their value propositions on their properties in the greater Toronto area. Do me a favor and hit that like button, it helps with the algorithms. And if you're looking to learn about more great stuff on real estate and the city of Toronto, please hit the subscribe button. I got tons of good stuff coming down the line. Now let's get into it. Over the last 10 years, residential real estate in Toronto has appreciated on average about 7.7% per year. Over that same time period, the Standard & Poor 500, which is a market that hosts the 500 largest publicly traded companies in the US, has had an average year-over-year growth of 13.9%. Still, if you were living in Toronto 10 years ago, it may have been more prudent to have purchased a $300,000 home that you would live in rather than to invest $300,000 in an S&P 500 index fund, and here's why. Reason 1, you're gonna live in it. While investing in a stock or a fund can yield a dividend, it has no other utility other than to build wealth. Owning your own home will provide you shelter and enjoyment, which every single one of us needs. And it's also seen a great return over the past 20 years. Reason 2, real estate is heavily leveraged, which means you're borrowing most of the money to buy it. For some people, it's 95% leveraged, and they get to keep all the gains from that borrowed amount. A mortgage is one of the few times that you can borrow hundreds of thousands of dollars to buy something that you enjoy, while the average Canadian can't borrow hundreds of thousands of dollars to invest in stocks. Reason 3, tax-free gains. Any gains you yield on the sale of your primary residence is tax-free. Selling your home to move overseas after 20 years? No, you don't need to pay taxes on that $1 million gains, thank you very much. Investment income, on the other hand, unless it's been invested through your tax-free savings account, you do need to pay taxes in the form of capital gains or income tax if you're withdrawing through your RRSP. Reason 4, with real estate, you build equity that you can borrow against. With stocks and investment funds, you build wealth which you need to continue investing in order for it to compound. Once your mortgage has been reduced, you can borrow against the reduced amount and use that to further invest again. Because all of us need shelter, owning your own home means you're not paying rent. Though you may be spending more a month on your mortgage, between 30 to 50% of your mortgage payment is actually going to pay down your principal, which goes right back into your pocket when you sell your home. This means that your total dollar cost per month is actually lower in home ownership than it is in renting. The line starts to get blurry when purchasing an investment property. You might actually be better served investing in various stocks and funds, and here are a few reasons why. Investment properties require active management to lease out units and deal with tenants. This is time from your hands or money spent on property management. Parts of homes will wear out with time and require fixes or improvements over the ownership. Roofs, paint, flooring, windows, sometimes even drawers and countertops can wear out, and it's not uncommon for tenants to accelerate that process. Capital gains taxes need to be paid on any gains of an investment property following the sale. This might be true with the sale of stocks as well, but should be accounted for in an investment strategy. The Ontario Residential Tenancies Act tends to heavily protect tenants, meaning you could potentially be dealing with that tenant for months or maybe even years while not collecting rent, all while that tenant is putting additional wear and tear to your property. You have to pay land transfer tax and lower fees in the purchase of real estate, and these costs need to be paid for in cash and can't be added onto your mortgage. Stocks allow for fast and cheap trading. Real estate, not so much. If you bought a poor quality property, you'll have to pay hefty fees in the form of land transfer taxes and sales commissions that can easily add up to tens of thousands of dollars. With stocks and funds, it's generally a fairly low cost trade fee of just a few dollars. With stocks and investment funds, you can generally pivot your investment strategy, but with real estate investment properties, pivoting is both difficult and expensive. It's my opinion that it's more beneficial to put your money in stocks and investment funds when you don't have as much time, energy, or interest to manage properties. You have room to invest in your tax-free savings account or your registered retirement savings plan. When you don't intend to hold on to your property for the long term, when you don't have the budget to purchase a quality rental property that will attract a reliable tenant, or if you find dealing with the potential liability of renters stressful. So why are people investing so much in real estate? Well, for one, it's tangible. People like to own things that are physical, that exist, that they can see, touch, and potentially use. There's less volatility in the real estate market. The average returns might end up being lower, but you're less likely to sell at a loss. Many buyers are buying property for their future, their kids' future, and their future flexibility. So that's it for me today, guys. What are your thoughts on it all? If there's anything you want to add or I left something out, you can comment down below. Otherwise, visit me online on my website at johnleehomes.ca, or you can call or text me at 647-983-0770, or shoot me an email at johnleerealestate@gmail.com. Thanks for watching, guys. I'll catch you on the next one.